Welcome back and thanks for staying with us. We have with us Varun Saboo, Head Equities at Anand Rathi Shares and Stockbrokers. And this is, of course, at the backdrop of your conference, Varun. Hi, very good afternoon. I'm Harsh here. Varun, let me start off. What are the big themes you all have focused on in this conference? And if I can follow up with another question to ask that, what has really stood out for you? So one is the big themes that you all have chosen, and what are the themes that are standing out, which were a surprise, maybe two each?
Hi Harsh, thank you so much ET team for inviting us on your show. So this is our All India conference. We host upwards of 225 companies here. We had 8 very interactive main track sessions also. The idea was of showcasing what Bharat is like. Our theme for this event was Unstoppable Bharat, and truly it is. It's remarkable how things are shaping up to be. If we have to certainly pinpoint and pick up a couple of sectors which are doing very well, it's very difficult. Because believe me, everything in the country is doing very well. Across companies which have come, the commentary has been super positive. Right from the larger caps like auto companies, we had some biggies like Bajaj Auto, Maruti, etc. We had a lot of mid-cap names like Gabriel, SJS, etc. Across to banks where we had PSU banks, we had private banks, the large cap ones, all of them being there. And one thing which is coming out, everyone is seeing so much traction on the ground. And obviously it has to do a lot with the way government has taken certain steps. We have seen the GST change, which is clearly reflecting across on how demand is shaping up to be. We saw that tax change about the 12 lakh rupee thing which had happened, which came at the right time. And now with this GST change, both together, the demand is just ballooning and it's going to a different scale in the country. It's a matter of time when you will start seeing small caps, mid caps, etc. also flying the way our index has been holding on to. Obviously, we have underperformed across versus the global indices. But I think it's time where India will start scaling up materially of what I can hear from the corporates and how the earnings growth trajectory it looks to me for the next 2 to 3 years. I don't see any reason why Indian equities shouldn't do well. Extremely positive after what we are seeing at our conference.
No, so Varun, point taken, but I'll still push you, I'll egg you on to give us 2 stories which are standing out for you, something different which is happening and which is getting ignored in all of the noise that we talk about on a daily basis.
So one of them is the auto story, where people were considering it to be that this 12 lakh rupee, where this GST change is a one-time benefit, and the festive saw a sharp jump in terms of how volumes have been and things would start subsiding. I think it's a completely different narrative of what we are hearing. All of the OEMs are talking upwards of a high single digit kind of volume growth, which we're going to see going forward. I think autos and auto anchs as a theme have just begun. It's not that we are at the fag end of the rally. They're just about starting. So very bullish, very positive on this theme, auto particularly. Apart from that, there had been a lot of concerns around how financials would shape up. I think across regional banks that we are hearing, across PSU banks that we are hearing, all are talking very highly about their ROAs being significantly strong, about their growth being very strong. So both of these themes, particularly autos and PSU banks, look very, very promising. If you have to additionally consider, I think private banks among the larger cap ones also should do well. So net, the two big sectors, both auto and banking, should do exceptionally well going forward.
Let me talk a little bit about auto. Where within auto do you expect to see an outperformance? Do you expect rural versus urban, two-wheeler, PV versus CV? Where will that extra additional flip come from, in your opinion, within all of these baskets?
So that's a very interesting question. Honestly, we are very bullish on the OEMs in terms of the PVs and two-wheelers. From a domestic per se, they're doing exceptionally well. They're talking about domestic demand per se for four-wheelers and two-wheelers to be very, very strong, high single-digit types, volume growth, which we're talking about. Apart from that, one of the names, if I have to specify one, it is Bajaj Auto, which looks very promising to us. The reason being that they're talking very highly about the exports also. The interesting thing was that they're seeing export demand also to be equally strong or even better. So it's not only about the domestic part, but from a two-wheeler perspective, the export side is also picking up. So if I have to pick one segment among the entire auto pack, it will be two-wheelers.
Okay, and yeah, that makes sense. And within lenders, that's the other place that you're really liking. So within lenders, you like PSU banks over private banks, I suppose. And is this because valuations are cheaper, or is that because that the growth runway is seemingly better for PSUs given the better asset quality? Trying to get a sense.
So sorry, I'll clarify again. I am very positive on the overall financial space, both private and PSU banks. But among the two, if I have to choose, rightly so, as you mentioned, I'll choose PSU banks, considering that valuations are much, much more comfortable there. You're seeing asset quality to remain extremely healthy for them, and that's what has been the concern in the past for them. ROAs of upwards of 1%, it's unheard of, which is where every company is talking about. So very strong growth, ROAs being strong, which is where we are very bullish on. We will be particularly very positive on the regional banks further to it, if I have to further detail into it. So names like, say, City Union Bank, South Indian Bank, etc., are looking very, very good to us.
And Varun, what about the decadal themes? You know, we're talking about defense, we're talking about energy transition, we're talking about aerospace as another sector, which could be a decadal theme, right? How do you view that? I'm not sure if you've had conversations around companies in this space or in the ancillary kind of space within this within the larger basket of these. What are they talking about, and how are valuations looking? Because we've seen a run up also over the last couple of years in some of these names.
Oh, certainly. I mean, if we have to call it a decadal theme, I think that will be too short a period. These seem to be very large opportunities. We had, in fact, 3 main track sessions, one focusing on defense, the other one on aerospace, and the third on energy, as you mentioned. And all 3 were sounding extremely positive with at least a 10-year plus perspective. I think all companies in this space are poised for significantly strong growth. I don't see a reason why valuation should bother anyone right now. And valuations being rich in this space is for a reason. If you see the kind of revenue growth trajectory that these aerospace companies are seeing, it's nothing because the base is so small. You're going to be seeing significant growth in terms of how these companies are going to report going forward. So we are very positive on aerospace overall and defense as well. Even if I have to hear from other companies, other sectors, say like a cement, etc., all of these have been mentioning that a lot of allocations have been moving towards the defense, right? So defense, particularly as a theme, should remain a very strong one, even for the next 5-year plus at least. And when we talk about aerospace and energy, definitely it's more than a decadal theme, definitely.
And Varun, you know, in every market, no matter how much of consolidation we've seen, there's always somewhere there's a bit of over exuberance. I'm not sure if you've covered some of those sectors or spaces in your conference, but give us a sense whether you have a view where you believe that there has been some bit of over exuberance, and maybe those sectors or pockets will be range bound or will consolidate for a little more time, because we've seen a longish consolidation already. So where will the pain continue to remain is what I'm trying to get to.
See, September last year, we had seen this entire exuberance being there across all spaces, be it large, mid, small cap. And for the last 1 year and 2-3 months, we have been seeing a lot of pressure that we've seen across indices, be it mid caps, small caps, and to an extent large caps as well. We haven't caught up to how the global side has been. And that's where this exuberance has cooled down a bit. But yes, if couple of sectors where you want to know where we think that there'll be some consolidation still going forward, I think consumers being one, FMCG particularly. The reason being that these are highly penetrated categories, right? So it's not that any GST cut helps in increasing consumption here because it's already penetrated. But yeah, allocation shifts from, say, if I'm having my real income going up, I will spend in an area where I can still buy a car, I can still buy something else, right? So that's where I think consumers will remain a little subdued. Despite that, in consumers, we have one of the companies which I think is very promising, which one should have a look at, is Godrej Consumer, because they are capturing a different segment altogether. They are creating categories of tomorrow. They are innovating new brands where there's a lot of under penetration. So figure out in the consumer space where there is under penetration in their brands, and that company will do well. I have spotted one, which is Godrej Consumer. The second space, which I think still would struggle for some time more, although I'm not very negative considering how the space has consolidated, but I think it's not going to move up in a hurry, which is cement. I don't see a lot of things happening on that front as well. Demand is a little subdued there. It might remain so for the next couple of quarters. But yeah, eventually private capex also has to pick up somewhere. And that's where I think cement companies post, say, the next 2-3 quarters should start looking interesting. But yeah, for the time being, I would think consumers and cement would remain a little subdued.
Okay. Thanks so much, Varun, for coming in and speaking with us. We'll let you go on that note. And we're hoping that this conference has been super fruitful for you. And some of the insights that our viewers also got, hopefully, added value. So thanks so much for coming in and speaking with us.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.